Hi everyone and welcome to Quick Take Review. Today we are reviewing CSL Ltd. Now before we go on, to those who are new to the channel, The Naive Investor is a YouTube channel that focuses on anything that relates to investing and trading. If this sounds interesting to you, please hit the subscribe button to stay up to date. Okay, let's get to it. So quick recap, CSL is an Australian pharmaceutical giant with a humongous market cap of 124 billion Aussie dollars. It manufactures very unique therapeutics products for very specialized conditions. The company is able to differentiate themselves because of their commitment to research and development. Since 2017, the company has increased R&D funding by 42%. And looking at their R&D pipeline, we can see the company strives to be at the forefront of medical innovations and stay competitive in a very high-risk industry. In fact, a lot of the products they provide are unique and life-saving for sufferers of the conditions. And this is a great strategic move. While generics pharmaceutical companies are busy copying the innovators, CSL keeps on innovating to stay ahead of the game. Sure, there are risks such as failed trials and wasted time, but I think with the amount of experience the company has gained over the many years and the talents in the lab coats, I believe CSL has systems to minimize those risks. The COVID pandemic has been a mixed bag for CSL. For example, plasma collection has dropped in the US due to lockdowns and movement restrictions, and plasma is important for their albumin and immunoglobulin cells. The company has started initiatives and collections are coming back up. In saying so, the lower supply has made the cost of plasma more expensive, offsetting the drop in volume to an extent. At the same time, seasonal flu vaccine sales have increased dramatically as governments put in efforts to prevent further stretch to the hospital systems. The Australian government has provided funding to CSLs to assist with the manufacturing of COVID vaccine. Financially, the company is looking great. Over the last 12 months, net profit after tax has increased by 45%. After adjusting for forex rates, this is still sitting at 44%. Cash flow from operating activities has increased by the same percentage over the previous 12 months. With the funding from the Australian government, the cash position for the trailing 12 months has increased by 3.6 times. However, the company advises of a downgrade for the second half of 2021. Looking at the chart, the company's share price has broken through the 78.6% level on the Fibonacci retracement and is sitting precariously under support. With the downgrade for 2021, I suspect the bear might drive the price down to the 61.8% level. This is approximately 240 Australian dollars per share. The question is then, would that be a good time to buy? I would say so, because that level is actually a very strong support. Seeing how unique CSL's therapeutic offerings are and just how huge its market cap is, I cannot see the company going under at all. If the share price drops close to that level, I would be very happy to jump in. Personally, CSL was one of those companies that got away for me. When I first looked at it, it was a mere 100 Australian dollars per share. Now look at it. Just look at it. It's a terrific company. So now I am on a mission to become one of its shareholders. If I FOMO out, I can always grab a little bit now and wait for the share price to drop further. And that is pretty much it for today's Quick Take Review episode. Here at The Naive Investor, we strive to bring you the most accurate information and in-depth analysis. This, however, takes a lot of time, so we would really appreciate it if you could share, like, and subscribe to show your support in the work that we do. Feel free to share your thoughts about this company in the comment section below and check out our other videos. Until next time, stay safe and keep looking for opportunities.